attorney Laura Anthony, founding partner of Anthony Linder and Kakamanolis, author of Securities Law Blog, and creator of the ALC Lawcast. There are so many meaty topics for me to cover these days. Today, I'm going to give a high-level overview of the recent Nasdaq rule changes and rule proposals. These new rules, taken as a whole, are clearly Nasdaq's way of improving the quality of listed companies, while at the same time, the SEC is proposing dramatic changes to ease the IPO process and ongoing public company compliance. The SEC will make it easier, but the Nasdaq gatekeeper is watching the door and those at the party. Here's a tally of the recent rule changes and proposals. On June 3rd, 2026, Nasdaq enacted new IM 5101-4, which provides the exchange with the authority to delist a security where the SEC has previously suspended trading in that security, and Nasdaq determines it's appropriate and in the public interest to do so. The new rule provides a fairly extensive laundry list of factors that Nasdaq will consider in making the delisting determination. The rule is focused on companies that exhibit trading activity that is indicative of potential manipulation and will be used only on companies following an SEC trading suspension also based on manipulative activity. In December 2025, Nasdaq enacted new IM 5101-3, granting it the authority to deny initial listing applications even where the applicant meets all stated listing requirements. The rule substantially expands Nasdaq's prior discretion, allowing it to look at outside factors, including associations with third parties unrelated to the company itself. IM 5101-3 was used to effectively shut down the small cap IPO marketplace, dropping the total number of small cap IPOs from 23 in Q4 of 2025 to a mere 5 in Q1 2026. The good news is that Q2 is seeing a small uptick, but not nearly close to historical levels. In May 2026, Nasdaq adopted a new and additional listing criteria for companies primarily operating in China, including Hong Kong and Macau. In short, China-based companies have been flooding the U.S. markets, sounding bipartisan warning bells about investor risk and national security. The new rules require China-based companies to offer a minimum of $25 million to non-affiliate public shareholders via a firm commitment public offering in order to complete an IPO. Nasdaq also increased the requirements for uplistings from OTC markets, direct listings and reverse mergers, and de-SPAC transactions. In December 2025, Nasdaq increased the initial listing requirements for companies seeking to list on either the Nasdaq Capital or Nasdaq Global markets using the net income standards, such that the minimum market value of unrestricted publicly held shares must now be $15 million for each. Previously, the standard for the Nasdaq Capital markets was $5 million, and for global markets was $8 million. In December 2025, Nasdaq adopted new rules allowing it to immediately delist a company whose securities do not maintain a closing bid price of greater than 10 cents for 10 consecutive days. In March 2025, Nasdaq adopted new listing rules for the Nasdaq Capital markets and Nasdaq Global markets, requiring that in an IPO, the minimum market value of unrestricted publicly held shares for each be satisfied solely from the proceeds of the new offering. The value of shares registered for resale will no longer be counted. In January 2025, Nasdaq adopted new rules allowing it to accelerate the delisting process for companies that fail to regain compliance with the minimum bid price requirements following a second compliance period and for securities that have completed a reverse stock split over the prior 1-year period. In October 2024, Nasdaq adopted rule changes to allow for an accelerated delisting process where a listed company uses a reverse split to regain compliance with the bid price requirements for continued listing, but that as a result of the reverse split, the company falls below other listing standards, such as the minimum number of round lot holders or minimum number of shares in the publicly held float. Turning to proposed rules, there is really just one, and it has gone through many reiterations, but it's a big rule. Nasdaq is proposing a rule change that would allow it to automatically delist a company whose market value of listed securities falls below $5 million for a period of 30 consecutive business days. This proposal is receiving significant pushback, including from the SEC. Among the main concerns is that the $5 million hard floor is not necessarily indicative of financial distress of the company or that there is some increased danger to investors. Further, the newly adopted laundry list of Nasdaq rules that are specifically designed to protect investors and remove distressed companies is enough. This one doesn't add any benefit. I will continue to follow and report on the proposal. Stay tuned.